But when we're looking at China being impacted by all this, it's interesting to note today, Bridgewater Associates' Ray Dalio is urging investors to buy into China as it opens its markets to foreign investments. Take a listen to what the founder of the world's largest hedge fund said in a video posted yesterday.
Look at the growth in the markets. Over the last 10 years, the stock markets in China has increased by market capitalization by a factor of 4. The bond markets, combining both the government and the corporate bond markets, have increased by a factor of 7. And they're each the second largest markets in the world. You want to be, if you're diversified, having bets on both horses in the race.
So it's kind of funny, too, though. I mean, we talk so much about the trade war and what's going on here at home and what kind of each policy tool will do to the economies that we're talking about here. But at the same time, we can't forget why we're actually in this trade war in the first place. When we talk about the president really trying to get China to open its markets, to compete fairly, and Ray Dalio saying that, there's some money to be made here if they follow along on that.
Yes, he made some really interesting comments and even himself acknowledged that what he said could be controversial, especially at the time that Washington basically is at war with Beijing. But he said that risks actually create opportunities for investors because things are so unclear, there are so many market fears and uncertainties that you can actually pay for a low price to bet on China than before. And also he believes that China now basically is comparable with the U.S. in key technology areas like AI and 5G. And so investors,
everything they've stolen.
so if investors want to get into the game earlier, it's now the best time to get in. So it's very interesting to see a billionaire investor and a hedge fund manager to make such a call. And I think it's also, for some people think about, is it like a zero-sum game, or can both countries basically rise in the end?
And I love what he said right there, because we look at the markets, we look at the boards, it's red across, and we're like, oh no, bad day for the stock market. But there's like some individual investors that are like, aha, buying opportunity. This is great. I know where I'm going to jump in. The issue is knowing where to jump in, because if you make a mistake, you're going to lose even more money.
But Nan, when we look at this too, it is interesting because we were talking about the way that, a lot of the tech problems and tech worries over this trade war is really trying to get China to stop doing what you were kind of laughing at there. Stealing the technology is the problem.
Yeah, but I think that's also the talks about what are we using the tariffs for? Because if you remember that in the beginning of the trade negotiations, President Trump said we're going to use the tariff to get the Chinese side to the negotiation table. And then everyone has been on the table for the past year. Still nothing happened. And until now tariffs become a tactic to push the Chinese side to make compromises. But now Beijing had explicitly said that they don't want to negotiate with a gun pointing in their head.
No, and they're trying to turn the gun on the United States. And Greg Gibbs said it a couple of years ago in the Wall Street Journal. But basically, the United States has a lot of political vulnerabilities.
That's
okay,
it right there.
The Chinese have economic vulnerabilities that exceed ours, but we have political vulnerabilities. They know very well, obviously, that an election is coming up. They know that they can maneuver and affect the United States policy.
And as you know, historically speaking, too, in terms of an incumbent president, his chances of getting reelected are stronger if the economy is solid. So Trump can't afford a recession here.
No, he can't. And that's why he's operating on a very short timeline as we approach 2020.